Doug Fabian's my guest. Doug, great to see you.
Thank you, Karen.
Let's talk about the role of discipline and how important it is in a volatile trading environment, a volatile market environment like we've seen.
Well, very important for investors to, from a discipline standpoint, to look at one simple statistic on their portfolio, their allocation to stocks. The volatility's been in the stock market. What's their overall allocation to stocks? Now, recently, our newsletter gave a sell signal on equities, and so we advised investors to lower their equity exposure significantly. Now, I think that this comes into play for individual investors because most times people don't have a sense as to when they would take the risk off the table. And the breaking of the 200-day average was what caused us to generate this Fabian plan sell signal. We have this methodology going back 34 years, and it served us well. On the day that I gave the sell signal, I didn't feel good about it. I didn't want to sell, but I honored the discipline that my dad originally developed. And now looking back in hindsight, market's significantly lower. We feel pretty good and feel in control to be able to buy back in the market when we get new opportunities.
With a profit. Yeah,
right.
Because this sell-off was dramatic here. Where are you looking for value?
Well, I believe first we have to kind of figure out the economic wins, and I'm a little concerned, obviously, with Europe, and then the contentious political environment that we're in Washington. I want to see some of those things settle down. We'll see that in the next couple of months. But
you think?
But on the I think that the stock market is actually going to force some fiscal discipline into Washington because it reflects the social mood of Americans, and they're not feeling good. So I think in and around S&P 1000 is where there is excellent value in the market. I'm not sure we'll get that low, but that's where I see excellent value. If we get down to 1050, I'm looking to start to add equity exposure in an environment like that.
Interesting that you said the market is going to force some sort of reason in Washington, because I think I heard a statistic that this recent market sell-off has taken more money out of individuals' pockets than a tax increase or spending cuts would have, and that's an interesting figure to look at.
It certainly is. Certainly, you have the general loss in wealth. And most people are passive with their 401ks, so they just look at their 401k accounts going down. They're really not active investors with that money. And that no one was really asking for, revenue enhancement like next month. They could have put that into a 10-year plan, come up with something where we didn't have the downgrade, and we would not be in this contentious market right now, I believe, if they would have done that. So I think that maybe this will force them to come to the table on both the revenue and the expense side, because I think both have to be there to come up with a deal.
Let's hope you're right. Doug, thank you.
Thank you, Karen.
Doug Fabian's been my guest. You're watching the MoneyShow.com video network.